Good morning, everyone. I'm Catherine Ross of TheStreet. I'm here on the floor of the NYSE with Jim Cramer. Jim, we had a little bit of a market rally this morning. What are your thoughts?
Okay, this market was down when I got up. It was down about 13 ticks in the S&P at 330, then rallied to like -7, went back to -9, and then the president tweeted. And that was off the race. The president causing a terrific short squeeze by saying that there's real movement in the China talks. And I don't want to doubt the president. I don't think he says things that where there's no basis in fact. But that was the squeeze, and this whole opening is because of him. There's some retreat, Apple, Nvidia. But for the most part, the China stocks are on fire. And, the president can get away with it. He's the president. He's the president of the United States, and he tweets it. And he causes a short squeeze. We discussed yesterday in CNBC's halftime show, what's the point of pain? When would the president make a move and praise China and say that there's going to be announcements? And the answer was today.
I want to talk a little bit more about China because of the auto tariffs. I mean, the auto tariffs are leading the U.S. auto stocks higher.
Right. If you get, if they do get rid of tariffs, it's great for Tesla, Elon Musk. It's theoretically great for GM. We don't really know what they're doing. But what's most important is optics, because the president cares tremendously about cars. They're trying to appease the president, for all we can tell. They are detaining a Canadian former diplomat, and we understand there's a boycott of Canada Goose. And Canada Goose does have good direct consumer business to China, but I think that what happened is they don't have a lot of targets. And going after Canada everyone in the world knows you don't go after Canada. Canada's a great country, and don't pick on Canada. They're a globalist country, open, honest, fair, democratic, no flies in those guys. So China's doing an ill-advised move going after anything Canada, anything. And I think the world knows that. The world has respected Canada and everything they've done, and we have respected. They fought with us side by side. And I really think that this is the Chinese playing with fire. Go after Canada. You don't do that. It's just not right. Everybody knows that. No one goes after Canada. It's just a sovereign state of goodness.
Jim, I want to talk to you also about your real money piece this morning, because I thought your column, which focuses on tech ETFs and why you should be focusing on single tech stocks instead of ETFs, it was really interesting.
Thank you, because we have a big split within the semiconductors. We've got ones that are just in free fall and ones that are doing well. The ones that are connected with the data center are doing well. The ETF people have brainwashed into thinking that there's single stock risk. I'm offended by it. I think it's offensive because what they're saying is the individual is too stupid to pick a stock. It is a denigration of the individual investor. And it is vicious in the way that they handle that, because they're basically saying the individual investor is going to pick a wrong stock. The problem is that the ETFs include wrong stocks and right stocks, at least for right now. Everybody knows that DRAMs are going down. NAND is flash is going down hard, but if you go buy a semiconductor ETF, what happens is you dilute Broadcom with the ones that are doing badly, and Broadcom's doing well. Take a look at that stock. It's had a 35-point move. It had an excellent quarter. I think that analog devices can come back. Nvidia's a little tougher because they do have that big inventory glut. I think it's going to hurt AMD less. But the idea of the single stock, this is just all part of the brainwashing in America that stocks are awful. You just have to put your money in an index fund, and because you can't pick anything. Warren Buffett, unfortunately, has been part of it. Now, the people who say the index funds, I've never been against them. I don't like the small ETFs, especially like a FANG ETF. That's just stupid. They just do that for fees. Everybody knows that. You think I couldn't have created one for fees? I created FANG. But the fee generation is the only thing that a lot of exchanges have, so they just keep creating ETFs. It's really something that the SEC should look at. Sometimes I think the SEC is actually captive of these organizations. So the ETFs are pernicious. They don't let individuals pick the right stocks. My philosophy has always been index fund and then mad money. But they never say individual stocks should go alongside of index. They are just 100% talking their book. I think that it's insulting to my viewers who want very much to try to find the next Amazon. But I'm crying wolf in a world which does not like that. I mean, for instance, today the China stocks are all up. So Nike's up. You can buy some of Caterpillar and Boeing. Now, I mean, if they created a Chinese a group of stocks that you buy when China talks are good, that'd be very like them. Like I could put that together and probably make money and say Jim Cramer's list of fact. But I won't do that, and I won't do it because it discourages the individual from picking his or her own stocks and creates a very narrow ETF that is then very important to the actual market. I think it's a shame. I was talking to Lee Cooperman yesterday. Lee knows that it's time for the SEC to really have a series of hearings, maybe even town halls. Find out why the individual investor has lost the ability to participate in the greatest wealth engine. And the individual investor is being really short-shrift. I started TheStreet because of that, so this is not a novel. I mean, in 1995, I started because I didn't like the direction I saw things going. And maybe I am, in the end, a dinosaur, but I started TheStreet with this notion, and I am not done. I am not done. I want the individual investor to be vindicated, and the ETF people to understand that it's not a crime for an individual, or not stupid for an individual to try to pick a right stock.
Yeah, and I mean, it's always important to diversify your portfolio. I'm really interested in what you just said because I think that I talk to a lot of FAs, and a lot of them have to say that you should be investing in ETFs as part of your portfolio.
I know.
And one of the questions that I got in my inbox this morning for Ask Cramer was about whether or not you should have an ETF as a major point in your portfolio.
Well, an ETF that is a highly diversified ETF, like an S&P fund or an international fund, fine with me. Absolutely fine. Vanguard Total Return Fund, fine. These individual crafted ETFs that are just done for fees are often hurting people because you're putting the bad with the good. Then they would say, well, listen, you can't pick the bad, but you're not able to pick it. Well, that's just untrue. I mean, Micron's bad right now and Broadcom's good. I'm starting to believe that you can start buying Lam Research. I do work. I outperform the market dramatically. 24 after all fees versus 8. People can try to find some sort of flaws in that. I think you're ridiculous. That's after all fees, okay? And I was a long short fund, so I kind of know what I'm talking about. I did it for 14 years, and I think I earned the standing to be able to say this stuff. There's always people who question my standing, and I obviously don't care. I'm still coming to work every day, but they're all short timers. The people who favor the ETFs, I question their... if you're taking a lot of fees for ETFs, are you really the person I should argue with? I mean, I think that your motives are suspect.
Jim, I want to talk to you about real money stock of the day, which is McDonald's,
Yes,
and we've talked about it before.
Yeah, that was we chose that one because McDonald's is really kind of the quintessential stock worldwide that in a lower inflation environment people should choose. I wish Charitable Trust owned it. We just have so many. We have so many rules. We haven't been able to get it, so we talk a lot about it on TV. But McDonald's is very right as the quintessential market stock for a slowing economy, where raw costs are, I think, have peaked. And management's very good. Easterbrook's doing a good job. China's no longer a factor. They're doing a big remodeling. We're going to be a series of stories today, the way Stock of the Day works. We will just blanket this thing. So if you're reading anything else from, typically like someone will have some Motley Fool or Seeking Alpha story up there. I'm waiting for them to say, oh, Stock of the Day, let's get in their queue. That's what happens on the web. Sorry to be so cynical, but you know what? I've been reflecting on this after 23 years, and there's a lot of shamelessness out there, and I don't want to be part of it.
And I do have to say that this morning, Kevin Curran, who is one of our Real Money reporters, had a great article about McDonald's chart. So if you are a Real Money subscriber, you should check it out. If you are not,
yeah, it's only up 19 cents. I think it's worth doing. I think people feel it's a little too defensive. I think this is the opportunity. We do Stock of the Day every day in order to be able to make it distinguish between what I regard as faux reporting and writing by a lot of websites where they just jam a couple of things in the Cramer says this or that because my name pops up. And again, it's the cynicism of the web is really, like if you look what happened to Oath and Verizon bought Oath and they had to write it down immediately. What you do is you just say, you know what, I find that there's, the web is almost impossible to read. Jeez, I hit things up and it's advertiser after advertisement after advertisement. The web has got to be careful. The companies that are on the web have to be careful. We've really slimmed down a lot of our ad units to the street because it's hard to read. That's going to go away. And one of the reasons you can have it go away is that Google and Amazon have really wrecked the ad business, and that's what happened to Oath. You can't. It's not a viable business. The ad business. It's just not viable. Subscription is the way to go.
Jim, this has been such a pleasure to talk to you. I can't wait to talk to you more on our Action Alerts Plus video.
Absolutely. We're going to have, remember, conference call next week.
Yes, exactly. We got to prep for that. All right. Thanks for joining us, guys. I'm Catherine Ross with TheStreet. We'll see you guys tomorrow.